Hi everyone, this is Brian Neal with TradeToBeFree.com, and today I want to go over some of the recent trading opportunities we featured in the weekly and daily alert on the site. And the first one I want to show you here is a real nice one on MDC Holdings. Housing has been one of the leading industries recently that's helped the market move higher and hold up during the most recent pullback. And we had this one in a little symmetrical triangle pattern, and also there's a real nice inverted J pattern in here. You may have seen the inverted J pattern on the YouTube channel and the site explained in more detail, but this is a real nice little inverted J pattern, and the entry point we like in this is a break of the prior high with after a higher low. We can see here this higher low forming and this pullback right here, and then once it breaks the prior high, that can be a good entry point in that pattern for a nice move higher. In the alert, we talked about waiting for a break above the short-term downtrend resistance within the top portion of the symmetrical triangle pattern. Okay, so this line right here, where the arrow points to, it says, top trend line in symmetrical triangle. The target entry is close above this line, and what that means, as explained more on the site, is that once it closes above that top trend line, we can then just put a market order to buy at the open the next day. So after work, you come home, you see that close above the prior day, above the top trend line, and then you can just put a market order in to buy the next trading day. So before you go off to work the next day, anytime between 4 p.m. the prior day and 9:30 a.m. the next day, you put your market order in to buy. Okay, that executes, and then you stick to your trading plan to take profits and to cut losses on this. Okay, so we can see that in this case, MDC, pulled back a little bit for a couple days, consolidated for a while, and then made a real nice secondary move higher. And we've been talking about, how it's important to take profits in that 4 to 10% profit range, and stop a little bit below your technical entry point where you're getting in. So, in this case, maybe a couple percent below this level here, perhaps below this low here, might be a good place to raise a stop. Okay, after you take some profits in that first wave higher. And unlike other strategies, you don't have to quit your job. You can do this after work. You can check your trades every day after work. It's swing trading, not day trading. You don't have to go out and spend $5,000-$10,000 on specialized equipment and very expensive trading, and use dangerous leverage with an offshore broker and all that. With this strategy, this can be used with Webull or Robinhood, which charges nothing for commissions, and free stock charting services such as Stocktwits.com. So it's a very low-cost way to trade, can work out really well, and you don't have to, again, have the dangerous margin like you do with futures and with other trading strategies taught online. You can use just a basic trading platform and free software online. Okay, so that's an example of the type of patterns that we look for. I mean, this is a stock that had a low P ratio, yet pretty strong growth, pretty good growth. Okay, a high dividend yield, where the 10-year yield is down to about 1.5%. This was yielding a lot more than that with the growth and with the rising estimates, I believe. Let's see here what it says below the chart. And yeah, just beat on their earnings, and estimates for next year had gone up 18% over the past 2 months. So, and with very reasonable valuation as well. So it's really good trading opportunity and example of the ones we trade. And down here you can see we have our stop loss point. Initial stop loss point, again, I would raise that if it gets off that 4 to 10% start, which is what we're looking for. And up there we want to take some profits in there, raise the stop, and just let that play out. Okay, and August was a good month for us. We had quite a few winners. The ones that reached the entry point are the ones that did well. For instance, INGN was a short, and it didn't reach the entry point. You can see here the entry point is moved below $41. It didn't reach that point. You can see here on the latest chart that it rebounded initially, came back down, still hasn't reached that entry point. It may still, if we get really hawkish statements from the Fed tomorrow, and maybe a really good jobs report where the Fed is going to go on a rate hike cycle again, let's say, or some major change like that. If something happens where the market starts to turn over, this may turn over with it, and this may reach the entry point at some point in the days or weeks ahead, so I'd keep this on your radar. If the market holds about where it is now and starts to continue to trend higher from here, then I would take all these shorts off the table. So I don't want to short, personally, I don't want to short if the market is trending higher. Shorting is more difficult to begin with, and if the market averages are moving against you, the win rate drops even more. So I definitely want to see price confirmation. So I want to see the price reach the technical entry point in the short. And the only one last month that did for us was Flow, FLOW, and that made a real nice move for us. I also wanted to show you another one here in Roku. In the last video, we talked about, one of the last videos anyways, we talked about how Roku was setting up an earnings flag. And we also mentioned this in the alerts as well on the site. And I want to show you a really good earnings flag. And we talked about how the formation was really strong here. We had a strong long-term uptrend leading into a big catalyst, the earnings and guidance raise. Okay, and then a narrow formation afterwards, and then a break in new highs after that. That's a nice earnings flag breakout. Okay, and we can see that made a real nice move from there. Now, last video we talked about having a very strong catalyst, or at least a somewhat strong catalyst to push into new highs. And we got that, another analyst upgrade, and that helped to propel the stock further and break out of this earnings flag here and make I think that's about a 15% move within a week or two out of a real strong earnings flag. Okay, it's another one of our favorite trading opportunities and technical formations is an earnings flag. And if you can get that move into new highs out of these narrow consolidations on a stock with rapidly improving fundamentals at the same time, which is key, you often have a real nice trade that goes in new highs. Now on the downside, in the last video we talked about how we took off ENPH. We either mentioned that in the video or on the site in the alerts. Forget now which or both, but we mentioned how we took some profits in that 4 to 10% range up in here. We happen to close it out up in here. Again, if you want to just play the long-term swing trade, you can do that and just go for that final target and stop it below the prior consolidation to get more room. So there's nothing wrong with doing that. It's just that in the higher volatility environment that we've been in, that the win rate will go down a bit on that. Another way to play it is taking some off in that 4 to 10% range and stopping a little bit below the breakout point, which is right here. And you could have done that as well. But, some work out, some don't. And Roku did great. And this one, made a nice 4 to 10% move. I think it was a 7% move higher initially after a great earnings report. And we also caught the big earnings eruptions trade right here. And then you had the first earnings flag breakout here, which would have turned out pretty well. And, finally turned over and now it's pulled back to the 50-day moving average. And actually, if we get a nice bullish candlestick pattern off this area here, we could be looking at another good trading opportunity in the days or weeks ahead. And we'll keep an eye on that and see how that goes. Solar is a high growth industry. It's also a commodity related industry, and those tend to have a little lower win rate as well. So that's why I favored just taking it off at that first 4 to 10% profit range above the technical entry point. Okay, so that's why I did that and mentioned that in the prior video when it was up here in the alert service. Okay, I also want to show you another good opportunity that's coming up too. There's a bonus here that's not really mentioned a whole lot in the alert service right now, but we've got this earnings flag on KUPA software, and KUPA had a really big earnings beat, raised their sales guidance significantly. I think they may have raised their earnings guidance too. I think that may have improved a little bit as well, which is pretty good given that the earnings beat and sales beat were so strong that they're really concerned about growth right now. They're not so worried about profitability in the near term. Okay, they want to take advantage of this big growth opportunity that they have in the years ahead. Once this earning flag breaks out to the upside, I think that could run quite a ways. Typically out of these narrow consolidations, you see at least a 20-30% move higher from that point on these top growth stocks with this kind of growth and this kind of acceleration in growth. So we could see this go to 180, I would say $180 to $200 in the not too distant future. So it may take a few weeks or so to get there. But as long as the market holds up, as long as the market doesn't turn over, or we have a negative event for the stock, I think it has a real good chance of making that kind of move in the weeks ahead. Watch for that break of, I think it's 155 and change, around 155. Look for that and see how it looks at the point of entry, and I think that has a good chance of making a big move from there. So, all right, that's about it for now, guys. Have a great week trading, and we'll come out with our next market update probably in the next day or two. Look for that on the site.